This is Paul Singh, the Market Speculator, with the trade report for December 1st, 2016. Into a new month here. November is out the window. Big move in oil yesterday. We finally got the OPEC news that everybody's been waiting for. Played out as we had hoped. And there was a little bit of a surprising development. Not so much of a surprise, but if you've been reading a lot of news articles, what the pundits have been saying, the OPEC news that we got with the cut of supply and the boost in oil was supposed to pick up the whole market. And on day one, that did not happen. So we got this huge move in oil, 8% on the underlying. Usually if we get triple leveraged up around 3 or 4%, that's fantastic. And here we had 8% on the underlying, meaning UWTI, which we're no longer trading, but was up 25%. And now if we look at, these are gappers yesterday, there are about 70 oil stocks here, oil-related stocks that were up over 10%. An insane day for one sector. But what happened here was we got this big move in oil, and basically it sucked the life out of the market. Basically, there's a set amount of money to go around, and it left just about everything else. The market was down 0.25%, the biggest down day in a while here through this run. So really the biggest down day going back to early November, November 4th. And even then, I think it would take here, November 3rd, to get a day like this. And maybe we're ready to pull back here after this big move. But what we did not see is money rushing into the market. So maybe we're going to have a little bit of a slower buildup for new money, if new money even comes in. But right now it was just rotation, money going out of other areas into oil, and basically nothing else yesterday. Now this is a list of breakouts from third quarter, and we had a number of them that were green. But for the most part, it was not a good day for the market, not a good day for sectors outside of oil, energy, and a few other industrial related sectors. Maybe some transport related sectors as well, but it was all about energy. So we're going to obviously keep an eye on energy. This looks to be a catalyst. Now, we've been faked out a few times. We thought post-election we had the catalyst in biotech, which it did provide initially. We had that nice trade from 42 to 49, but then it's pulled back here and hasn't done anything since. Maybe it's still going to ramp up, but it's a slower consolidation. We'll talk about this related to our current position in a second. But at the moment, this is a huge catalyst, huge volume, huge breakout. Now, it may not run all the way, although we're getting continuation today, which is good, up 1.6, nothing like the 7%. But we always like when something we're watching is above 1%, and it's at 1.6 pre-market crude oil. Market's basically flat right now. So we're getting that continuation. If we look at our entry, we'll skip the indexes for now because basically everything is down, and that's all you need to know at this point. UCO, we entered at about 10.03, and we're set to open now 10.70, and my target range was 11 to 12. And if we pull this out here, you can see we've got the initial price here in 11 to 12 range, and then going back to just summer, we could get up to 14 here. So there's a lot of room to the upside if this is going to be the catalyst we expect for oil. Now let's look at energy XLE. This looks even better. I mean, we're breaking out the highs here, and then we don't have really any resistance till we get back here to 2015. So energy is looking very strong, and we'll talk about energy in a second when we talk about the stocks we're watching versus ERX. And ERX is the triple leveraged, and I took OAS instead of ERX yesterday, but ERX is set to open at 40 today. Now let's go to our positions here. First, let's hit the new positions. UCO, we just talked about, and then OAS entered at around 1460, closed the day close to 15, and we're already up here at 1555. And I think I talked about 16. I really would like to see this go to 17 to 20, but 16 is the bottom of that target range. Again, huge catalyst, which could send the stock soaring to levels it hasn't been to since 2015. So energy is looking very strong. Twillo made a nice comeback for us here, although it did pull back in by the end of the day. We're back around our entry level, and we'll see if we can get that bounce in here. Now, we're on shaky ground on 3 different positions here. FAS is right at the bottom of that stop range, and I did not want to get out because the market is so extended. So this is one of those cases. I've had a few this year, and sometimes it's worked fantastically. Sometimes it hasn't, where I loosen my stop a bit, but I have a small enough position size where it's going to keep me in my risk parameters. And if it's not keeping you in your risk parameters, then you have to get out. But you can see here with SPY ready to, looking like it's going to pull back here. I don't want to get out of financials here, even though financials showed relative strength. If the market starts to pull back, I would imagine financials are going to. So trying to stay in that. Facebook, disappointing here. We had the remount, and now is testing that remount range. And we talked about 118 being our stop level, so I'm going to watch that closely. And we're set to open around 118.30. And then LABU is getting close to our stop here at the bottom of the breakout bar. Now let's look at XBI and analyze this. I know some of you got out yesterday, and you need to manage your risk to where you can hold through some important levels. So we're right at the moving average, and we're right at the bottom of the range. So you'd like to be able to hold through this. So this is kind of a bad spot to be getting out. But nonetheless, overall, biotech still looks good, but has not run past that initial run. We're getting that consolidation here, and hopefully it still looks good. At some point we break here before getting stopped out. Okay, now let's get back to energy. I'm going to go through this list here that I have in the report. Now, again, there are literally over 100 energy stocks you could choose from. It's basically a pick 'em. I went with the ones I know to be volatile and are showing good chart patterns, which is why I went over OAS. And whenever you're doing this in a sector that has a good triple leverage, ERX was up 15%. So we want something that has the ability to beat ERX, which is why I went with OAS yesterday, which was up 27%. Now you may say, well, this was up 27%. Why are you going with that one when it's already up so much? Because it's more volatile. It has the opportunity to get, it makes these bigger gains. And it wasn't 27 when we entered. I think it was around 20 or 22. Okay, let's go through the list. MRO was up 20% yesterday, big move. More of a big oil exploration type stock. Rig, another drilling stock here, 300 float, a little bit bigger, but has the potential. Again, all of these have the potential to move. Was up 17% yesterday. WLL, one of these volatile ones, up 30% yesterday. WPX, again, up 27%. And these all have nice clean patterns, which are some versus some of them that might have been up 20%, but they were breaking right into ranges. NBR, up 22%. EPE, so they're all putting in the same pattern. CRZO, the one that's a little bit different, but I just included it, and I actually don't like that it's not clearing anything, but this has been one of the leaders, low floats in energy, and was up 20% yesterday, and that's REN. And then finally, I guess that's all of them, and then you can see here, ERX. You can't go wrong with just going with ERX, which is up 15% yesterday. Now, let's go away from energy and talk about some other sectors. Steel did bounce back a little bit, so put in this pivot here after holding the 9. Wasn't the strongest move, less volume than the pullback, so I want to see how this tests here. So all of them did the same thing, X, AKS, a few other ones, and then we've got the copper FCX, which put in a very similar pattern. So we're watching steel. I would like to get in, but I'm going to wait and see how it plays out. I added a railroad TRN looking very strong. Some banks, WFC, Wells Fargo looking very strong, and then a local, a regional bank, SIVB looks pretty strong here, and then ORZK was OZRK, very strong here. It was up 3% yesterday, which was good for anything outside of energy. A chemical stock I've added, WLK, very strong yesterday, moving like an energy stock. I would imagine they have something to do with energy, considering they moved 8% yesterday. Two things totally related, unrelated from industrial. Cyber cybersecurity stock. I'm watching for the remount of the 9, put in a good volume pattern here. Now it's pulled back deep, but I like that the pullback has been on low volume, and then Alta here has been very strong, pulling back to the 9. I want to see it hold that level. So that's what we're watching now. And I'm also building a short list. If we look at Buffalo Wild Wings here, these are very strong areas. Most of these that I'm going to point out here are strong, but they've made big runs. And if they close below the 9s, they could make a pullback, and they would still be strong stocks, but they could pull back here from, say, if we enter at 167, it could pull back to 160. So Buffalo Wild Wings, SOX L, which is a semiconductor ETF, and you can use SOX S to go long. AAOI, very similar pattern. NVIDIA, another semiconductor here, very similar pattern. And then some of the defense stocks, LMT, showing a little weakness yesterday. And then Apple is just showing a lot of weakness. This is not one of the strength stocks. Coal stock, which has been very strong, already below its 9, so that might be a decent short already. And then Amazon has been very weak. The weakest of the 4 fangs here has been Amazon, which is surprising. Now it's December 1st. We're going into that December year-end seasonality. We're going to talk about that a little later, maybe in tomorrow's report, because we're really focused on energy right now. But that seasonality usually doesn't start till later in December, and the first part of December is usually a lot of chop. So we'll start to talk about that as the days progress here. That's trade report today. Maybe I add an energy in here. Maybe I add one of these shorts. We'll see how the market develops today.